What is up, YouTube? Welcome back to Stacks and the Numbers, and I wanted to do a quick update here as per request on Enovix Corporation, ticker symbol ENVX. Stock took a big hit today. Stock closed at 601, down 62 cents, about 9.33%. As we see, we hit new 52-week lows, sub 6 here of 587, and I hate to say it, but I basically called this one. And I even mentioned it in the Discord. And let's see. Because, sometimes I like to brag a little bit. But I know, obviously, if you're holding it, you don't care. And this is going to upset you. But as you see here. Right here. July 24th. Right after the market closed. I said, quote, Enovix can literally crash back to $6, no problem, and it would be completely justified. Again, that was just my opinion, but as you see, the stock is back at $6. And in the moment, again, I know a lot of people are very upset. You don't care if I said it could go to 6, you're down, you're upset. I understand where you're coming from. But again, the main point why I was fairly confident saying that at the time was because, as I mentioned, this whole run-up, this whole breakout really was unjustified. So, like I said, even when I did videos on it back here, if you guys were involved and you caught the squeeze and you made a great return, listen, congratulations, well played. Okay, I'm not knocking the strategy. However, the problem is, again, the fact that the company was barely bringing in any revenue, and at this point was worth several billions of dollars, right? So it was something similar, almost to like what we saw with Luminar Technologies, or even more recently what we're seeing with Fuel Cell, right? FCEL. Same thing. It's like, there was hype behind it, too much volume, too much growth came into the situation, and now we've gotten to a point where, in my opinion, even if the company does start to bring in millions of dollars in revenue and beat earnings, it's not going to matter because it may still be overvalued. And that's why, again, you can see we had our breakout here to, like 24, and then we've been basically down and down since then, of course, with this slight run-up after these earnings. Now, I believe the last time, we looked at it was back here, February 20th, when the company reported earnings. As we see, great quarter for them, and now we can see they're actually bringing in millions of dollars. So, in my opinion, potentially soon, we may be near, quote-unquote, the short-term low of the lows before we find that bottom, potentially bounce, and form that U-turn recovery. But we can see estimates on the revenue side were a touch over 3.1 million. The company posted almost 7.4 million, beating that by over 130%. So, in my opinion, very good quarter for Enovix right there. But again, the problem is, even with the stock now down here back at 6, the market cap $1 billion. $1 billion. So now if we extrapolate this number, let's say they can hold this number, right? And if we expand this out, extrapolate it over 4 quarters, we can say, hypothetically, you're looking at what? 28, 29, 30 million, we'll call it, for the year. Which means at a $1 billion valuation, $6 a share, we're still currently trading 33 times that potential yearly revenue number. And I'm sure a lot, people in the comments are going to say, no, they're forecasting to do more than that. No, I understand. But you understand my point as well, right? If we're bringing in 30, 40 million for the year now, a $1 billion valuation may still be viewed as high. So, in my opinion, what I usually always say, and what I've seen in the past really with a lot of these companies, is when you're right at that state of infancy or right at the beginning of the growing phase and you're bringing in a couple of million like this company is, or you're forecasting soon within a quarter or two that you're going to start generating a couple of million, in my opinion, those situations, usually you see a market cap of anywhere from like 700 million to like a billion, maybe like 1.2 billion. Again, this is just my opinion, but that's kind of the pattern I've noticed. Because you can't say on paper, in my opinion, oh, it's $1 billion stock. It's $1 billion company. I don't think you can really say that until you're kind of hitting like that 80, $100 million mark. Because even at that point, you're still trading roughly 10 times yearly revenue, right? But if you're growing nicely and you're forecasting even more growth over the next year or two, that's what I'm saying. I'm sure you guys can appreciate the point I'm making. Then I can understand you're telling me, oh no, it's $1 billion stock. We can easily get to, 1.3, 1.5 billion, no problem. We still have some growth from here. Like, if you laid it out like that, in my opinion, I would understand that. Because even though personally I might think it's overvalued just looking at the revenue, we do understand also that stocks trade based on future value and future growth. So if there's more growth coming, and if it is going to be consistent and has been consistent, then I can understand taking it from 1 billion up to 1.4 billion valuation, in my opinion. That would make sense. But the difference here is this company, Enovix, just started doing this. Okay, as you see, several quarters back, $1 million on estimates of 900,000, very nice. Then we drop back down to 20K. We have a real light quarter. Then the next quarter, estimates are only at 48.4 thousand, and they post 42, so they came up light again. And then it was this quarter that showed us a little bit of life come back into the stock. However, again, in my opinion, if I was a holder and I happened to jump in late, let's just say here at 10.5. But also in the back of my mind, I kind of know, quote unquote, in my opinion, that we could sell off to 5 or 6. Then if I went on a run off of this positivity up to, my apologies, up to 14, 15, then in my opinion, I would probably take the money and run, because I would be viewing it as a situation where I just made like a quick 35, 40%, and it may not have really been justified because the stock was overvalued this whole time. So that's why sometimes with these situations, you have to be in and out, in my opinion. And it's not always worth it to just hold and say, oh, it's rebounding to 14. Next stop, back to 22. Like, you know what I'm saying? Like, that's like don't get ahead of yourselves. And also at the same time, in my opinion, it does seem like a volatile market. And, it could change on a dime, and 1 minute we're up, 1 minute we're red across the board. So I understand we all look at these trading videos and we see returns of like 600%. So that's what everyone's aiming for. But remember, over the course of several weeks here, to go from 10 to 14, that's a pretty big percentage move. People forget that. 40% is a phenomenal move. I already told you that usually the average advisor on Wall Street, if they're lucky, is able to show their clients like 10, 15% growth year over year. So if you're able to catch these trades, even if it's a quick 20, 30% in change, let me tell you, believe me, in my opinion, that is much, much better than the average person is seeing. Those are better returns than the average person is seeing. So don't like put up your nose at those returns. You understand what I'm saying? That's my point. That's my point. But again, I understand everyone has their own strategy. So if you're looking for 300% instead of 30%, believe me, I understand. But if we extend this line out here, again, this line was from basically the bottom right at the open back in 21. And then I connected to the bottom of that body, it looks like, right there on May 10th, 22. And it lined up and connected with that bottom right there, that last low that was hit back on January 4th, it looks like 2023. So that was that trend line, and right, I just extended it out. So hypothetically, in my opinion, we do have earnings coming up soon, right? Within a couple of weeks, we can see forecasting a loss of 31 cents on revenue estimates of 3.944 million. And in my opinion, based on how they just brought in a couple of million above the couple of million that they were estimated, in my opinion, I would say right now in this moment, this company actually has a good chance to beat this number. But again, 4 million, we're talking 7 million. That's why I'm saying technically at this $1 billion valuation, we could still be viewed as overvalued. And if we come down here, you can see we're basically right at about 4.5. Which would be roughly a 25% sell-off from the $6 level. Again, this is just my opinion, a trend line I'm watching. It's not set in stone that the stock is going to drop to 4.5. It may bounce here after hitting these lows. We don't know. But in my opinion, I actually think this drop, this sell-off here would be justified. I think that would complete the sell-off journey, in my opinion. right? Because again, I know a lot of you back here when I made the videos here at like 18, at 20, and I was saying, oh, in my opinion, this should go back to single digits. We're way too high. I know a lot of you were kind of like button heads with me when I said that. And believe me, I completely appreciate that. It's your position. You know, you just saw this big growth. So you're trying to stay positive. You're trying to stay confident. So I appreciate the fact someone on the other side of the fence, you kind of throw a little bit of shade at them. But like I always say, when I speak about, in my opinion, with a lot of these stocks that we just kind of flew up and overinflated, we need them to come back down to earth. We need them to come back down to reality, to a realistic valuation. And then that will force new money and new momentum to come into the stock, in my opinion. So if we do drop down to this trend line, this is what, like this time next week, but earnings are May 1st, right? So in the next week, we could potentially drop all the way down here, which I understand in your opinion might suck for you. However, we could immediately bounce and actually reclimb right back up to 6 with this momentum coming into these earnings. And then if they beat, we could maybe potentially like meet up and retest this trend line here at like, 730 or something like that. If everyone's pumped about earning, you understand what I'm saying? If they come out, they give a nice positive report, we can sell off, potentially bounce off of our long-term support level. Actually, it's more of like a all-time support level, in my opinion. But again, this is just my personal trend line. But we could potentially drop down, retest this long-term support level, bounce with the momentum, beat earnings, you understand, and gain more momentum and potentially get back to that $7, $8 level, just based on that recent positive news. But point I was making is 25% haircut from here would bring us to 4.5. 25% haircut off of the market cap would bring us to 750 million. And in my opinion, as I said earlier, it seems like a lot of these smaller, newer stocks trade with a valuation of anywhere from the high 100 millions to the very low 1+ billion mark. So the fact that it's down at 1 billion, in my opinion, I think it makes sense. And also because the company literally just started bringing in these millions and the markets have kind of been mixed. In my opinion, I actually think a drop down to 4.5 before bouncing and rallying again, hopefully coming out of earnings positively as well, I think that would make 100% sense, in my opinion. And if we feel that now, because I know they were building out their facility and whatnot, they're increasing the manufacturing and their efficiency. So if this is now all really developing and coming of, if this is a coming of growth situation that we're currently in the moment of, then in my opinion, yeah, if we continue to sell off and like we hit this fib here, 534, and we kind of start bouncing around, maybe low fives, in my opinion, I would be a buyer. And I know that just came out of left field, right? Because this whole time I said I wouldn't touch it. But in my opinion, based on what this company is forecasting and based on the recent couple of millions that now the company is starting to generate and bring in my opinion, at around 5 or even this 4.5 level, in my opinion, I would seriously consider taking a position, especially if we're going to say that potentially like this time 2 years from now, this stock is going to be much bigger and doing much, much more business than they're currently doing. If you have that kind of outlook, then in my opinion, to take a shot down here, like at 5 or this 4.5 level, in my opinion, that would make a lot of sense. And even if you own it potentially at the double digits, to potentially try to maybe free up some capital to try to add to the position here and lower that cost basis, in my opinion, would not be a crazy idea. But we can see the company's been beating on the EPS side for the last 4 quarters in a row. We do see a little bit more of bleeding forecasted for next quarter, but the company's been coming in above that loss estimate, so only time will tell. And we can see, yeah, we went from thousands, got up to 100,000s, then we just did a couple of million. However, of course, it cost 60 million to bring in that 7 million. So in my opinion, that is a red flag. However, the company really seems like they just got started. So, and the stock really pulled back. So I can't really beat them up too much here. But let's recheck the financials real quick. So this is on the annual side. Okay, we've beaten the last 2 years. Now for 2024, look, 22.3 million, right? So obviously I'm wishing them and all of you guys out there holding shares, I'm wishing all of you the best of luck. And the company may come in with 25, 30 million. But again, at $1 billion valuation, that in my opinion is still overvalued. So that's why I'm saying the sell-off in my eyes could potentially continue, but we can see we're still expecting bleeding. They came in more narrow on those losses for 2023. 2024, we're looking to extend the losses down to about $1 a share. Quarterly, we're 2 for 2. And again, EPS has been pretty solid. We can see also the cash has been going down, of course, because again, the company's kind of operating at these big losses. So we can see just a couple of quarters ago, the company had over 340 million in cash. Then we're down to about 270. Then we're down to about 233. So we're kind of losing tens of millions of dollars quarter over quarter here. But again, at the same time, if they're mentioning they just built out like 250,000 square feet in Malaysia, I believe it was. So that's why I have a feeling that if they're just kind of able to keep themselves afloat, we may potentially have a decent long-term grower here. But we have short-term assets heavily outweighing short-term liabilities. Long-term assets and liabilities basically kind of in line. We come over here to our balance sheet. And we can see, look at the growth in liabilities compared with the growth in equity over about this 18-month period, right? So we went from 487 million and a quarter excuse me, 487 and a quarter million in total assets back in Q2 of 22. Now we fast forward 18 months later, we got about 80 million more in assets. We're up to over 565.5 million. Total liabilities went from 58 million to over 300 million, right? So that's a 500% increase. And here we saw 17%, 20%, less than 20%. So that's why right now in this moment, this is why, in my opinion, it's hard to time your entry points when we're talking with companies like this. And again, kind of like in their state of infancy, not yet really bringing in a lot of revenue this whole time, but the stock starts to run, so everyone has that FOMO. Oh my goodness, where's it going to go? Do I have to get in now at 12? Are we going higher? So believe me, I completely appreciate the fact that you may be stressing about this situation. But like I always say, however dark the cloud, there's always a silver lining. And again, that's why I'm saying we have been selling off. We could potentially drop lower, maybe that 4.5 level, but we could see a nice healthy bounce from there. And we do have the potential for the company to beat earnings in about 2 weeks. So we may start to see some life and some growth even from this level, even if we go down before we go up. But the equity was consistently decreasing. And we can see that actually last quarter, we saw a slight bump up in total equity going from about 252.5 million to a little over 261 million. However, the debt increased during that time as well. So we can see the debt really ballooned up here, getting to the 100 plus million mark. It was holding that 174 million for back-to-back quarters. Now, as of last quarter, it jumped up almost 10% and jumped up to 190.6 million. So we did get what's that, about 9 million bump up in equity, but we also got roughly 16 million bump up in total debt. So we can see the book value slightly down, but relatively unchanged for the most part. And that's why I'm saying, even pulling back to 4.5, we'll still be trading 3 times book value. So, it's not the worst case scenario, right? In my opinion. But also I want to show you the free cash flow as well. Right? So this is what I'm saying. We understand in the moment that this company is incurring more losses than the revenue that they're actually bringing in. So the absolute bottom of the bottom and the company, the overall quote unquote like company U-turn road to positivity may not happen for a little while. However, in my opinion, as long as the company keeps expanding their facilities and, increasing their efficiency and all that and consistently beating earnings, then in my opinion, it should at least hold its value. But we can see free cash flow, see back here, Q4 22, we can see free cash flow minus 26.68 million, minus 28.64 million, this bar in the center I'm looking at, the green. minus 36.25 million, minus 45.5 million, minus 56 million, right? So our cash flow consistently keeps dropping along with the excess cash that we have on hand right now, while slowly increasing debt as well, which is why I'm saying a situation like this, in my opinion, in the short term, to have it start chunking down after rallying so much, instead of maybe remaining flat or even climbing with markets if they're green, in my opinion, this makes sense to me. Because fundamentally, we were just too overvalued. And again, as much as you may want to fight that point, like I always say, if a stock was really worth more, it would have held its value. It wouldn't have continued to slip. So, again, this isn't necessarily like, haha, I was right, you were wrong. I'm just trying to prove a point. I'm just trying to show you guys, how I look at it, and that the analysis I originally did, giving my opinion, may have been spot on because, of the specific situation we were in. But we seem, Steam friend, my apologies. We seem to be increasing a lot of these numbers here. We can see we were minus, thousands of percent here. Now the gross margin, we're sitting here at minus 330%. These numbers are still pretty drastically negative, obviously, as you can tell. But, up is up, right? Up is up. So a lot of these numbers slowly moving in the right direction. Inventory took a hit. Asset turnover went from 0.01 to flat. Now it's up to 0.02. Our debt ratios, of course, have been consistently climbing over about the last 18 months. But the bleeding as of late hasn't been that bad. But now we can see moving forward, now we're forecasting a couple of million at least, consistently, potentially, hopefully, right? But we're forecasting a couple of million every quarter now moving forward. So now we have a much, much different situation than we had here, because we were bringing in a couple of thousand, we just broke a million, then we dropped back down to tens of thousands, right? So in this current situation, when I looked at the company and I saw whatever it was at the time, 2.8 billion or whatever, I basically knew in my mind, yeah, this stock is definitely going to take at least a 50+% hit, and a lot of people may be upset. And again, that's what happened. But after we pull back, in my opinion, to that 4.5 level, if that does come to fruition, then again, reevaluating this situation, looking at whatever they said, 22, 25 million they were forecasting. Actually, it's right here. What am I asking you for? Right here, 22.38 million, right? So if they bring that in, but look at the growth forecasted over the next 1 to 2 years, that's why I'm saying once we start to actually see that growth in revenue and they're actually kind of in stride with the forecast that they laid out for us over these years, then from that point, we can say, okay, right now we're maybe worth, a billion, 1.1 billion. Rolling into 2025, as this revenue starts coming in, now we could potentially, in my opinion, that's when we could really start chunking up the stock. 1.5, 1.7 billion. 1.9 billion, right? And now, boom, you rolled into 26. Now, all of a sudden, they're bringing in over 400 million. Well, now at your 1.5, 1.7 billion dollar valuation, now, in my opinion, you're undervalued, right? Because the company's growing like a weed, and we're only valuating the stock at roughly like 3 times, 4 times yearly revenue, when we can easily bring that up to 6, 7, 8 times yearly revenue. And that's where the stock takes that next level higher. You understand what I'm saying? But again, this is my opinion. But if these numbers come to fruition, this is why if we fast forward to 2026 and this company is doing this type of valuation, if this company is actually bringing in this type of revenue that they forecasted, then yeah, even if you go 8 times that number, that would be, and again, there's a tech company, right? They're doing batteries or whatever the heck they're doing. So we could potentially value them even higher than 8 or 9 times yearly revenue. We can bring them maybe up 10, 12 times yearly revenue. But, we can say 3.5, 4 billion. And that would bring us back up, that would bring us back above $20 a share. Right? That would bring us back above $20 a share. And that's the point I was originally trying to make. Am I trying to, rain on your parade and say that I don't see the growth and that this could never be a $20 stock? No, of course not. But here in the moment, it simply wasn't. And that's why I feel like kind of no matter what's been going on, the stock has just been consistently selling off. And like we looked at last quarter, they came in with those decent numbers. The stock saw a little bit of life, ran back up to 14, and then it started to immediately sell back off and drop down to single digits, right? So that's why it seems like it can't hold that value because, in my opinion, the actual business itself cannot fuel and maintain that valuation. But again, if we fast forward hypothetically 2 years from today, and this company, halfway through 26, they're bringing in, 180, 200 million so far for the first 2 quarters of 26. Yes, then absolutely, we can come back to the situation, and I will say, in my opinion, this will probably go to, 20, 22, back to that high of 24, 23.90. So, it was squeezed, it ran a lot, but now, in my opinion, it's got to drop a lot. But also, if they can keep coming in more narrow on these losses here over these quarters as well, in my opinion, I think that'll help kind of support the base of the stock, right? So even if we dribble in over the next couple of quarters and bring in, 4 million, 5 million, 8 million, fine. But if they're not losing more than Wall Street anticipated, I think it's going to speak even more highly to the value of the stock. And then if we hit that point, if the low of the low is like 5, then even if markets really begin to sell off, the stock may not break that level too much because they're a growing company on track and the losses are being held in check, in my opinion. You understand? So that's kind of the way I'm looking at it. But technically, this is why I'm saying I think we could continue to sell off, and I don't know if we'll come down that low, but this trend line right here, 4.5, in my opinion, does make sense. Again, there's a 1-year chart, so we can see on my screen next fib level 534. So we have to see now if markets remain mixed or potentially red for the most part, at least like 3 out of 5 days of every week moving forward. In my opinion, I think we could see something like Enovix just slowly trickle down and maybe make those new lows before bouncing again, going up into earnings. But also here, if we look at, we have an RSI now sub 30. So that's why we could potentially see a bounce in the next day or two, and it could try to go green or at least remain flat potentially. But you can see next support level 541. What was that fib? 534, right? So that's why, in my opinion, 540s, 530s may potentially be the next stop. But again, the RSI technically sub 30, and we saw the last time it kind of approached that point, we had our rise, and you can see we went from, low 7s up to, about 9. So we could have the potential for, a quick like 20-25% move. But again, it may just be kind of like a little relief bounce here for the RSI, and then we could possibly continue to step down. But the MACD was kind of crossing up and down and recently crossed to the downside here. So a chunk down today. But also, we switch over to the weekly, and we can see the RSI technically hasn't hit that 30 benchmark level. Now, all the way back here, mid-22, you can see we basically hit that 30 mark, and then we went on a really big run. And then after that, we never really tested that, on paper, low of low benchmark of 30 on the RSI. So that's why it may potentially continue to sell off for a little bit, but a bounce could potentially be coming soon. MACD just kind of steadily just hanging out. But we can see, even looking at the weekly, see how like it tops out at these pivot points, and it's like it has to reject because, in my opinion, it's just overvalued. We run it all the way up, we break it right through one level, and as we're approaching the second level, we kind of have to top it out and then sell it off and bring it back down. And then we try to run back up to that previous level, but we get rejected and we have to pull it back and sell it back off, right? So that's why I'm saying, just to kind of like consistently go on a run like this in the stock, in my opinion, you need either A, a really good quarter in the next 2 weeks, or B, we need to bring it down to that bottom that I was looking at potentially, in my opinion, of about 4.5, completely sell it off, bring it all the way back down to earth, then all the buying comes in at the bottom, then hopefully we beat earnings, and then we just go up and up and up. But again, that's just my opinion. But, you know, if one of you guys in the comments, you know, predicts like, oh yeah, you know, I agree it'll come down to 4.5, but then we can run back to 11 after earnings. In my opinion, I might actually agree with you, because I know there's a lot of hype and you know, there's a lot of attention behind this stock. So if we do really sell it off, if we do potentially hit that bottom, that break point, and then everyone, like we said, jumps in hoping that earnings are good, and then earnings come out and they are positive, that'll bring us up even more. So to potentially see this stock over the next couple of weeks go from 6 to new lows of 4.5, back up to possibly like $9, $10, $11, in my opinion, it may actually happen. But again, it's basically out of our control here, in my opinion. It's really all up to the company and what they report. But if they are able to do what they're forecasting over the next couple of years, then that's what I mean. At a more realistic value here, now we could soon potentially be talking about a very, very different situation. But just wanted to do a quick update on Enovix. I know someone asked about it, and then when I pulled it up, I saw it was down a chunk today, and it touched new lows. So I figured I'd just do a quick update for you guys. But yeah, earnings coming out soon. May 1st. What happened here? This guy sells shares. What'd he sell? 36,000 worth. That's, in my opinion, that's not news. Announces Fab 2 manufacturers. Completed our rigorous FAT process, roll machine. Okay. SAT. We're on track to produce our first X1M samples for mobile and IoT customers in Q2. Okay, very nice. That's right now, right? Enovix patented manufacturing process uses dozens of machines, battery cells. Incredible plot of hard work. Yes. Just 100 days, the team built a world-class factory in 100 days. Wow. I hope it's safe. No, I'm just kidding. I'm sure it's fine. Putting us on the path to produce first samples of our silicon batteries from Fab 2 this quarter. Okay, so now if we're able to now produce first samples for this quarter, then we may not actually really ramp up that big production until we're in next quarter. So in my opinion, next quarter, roughly 3+ months from this quarter's earnings, and the quarter following, actually, because if they're actually going to produce next quarter, roughly 3 months from now, then those sales may not be seen until the following quarter afterwards, another 3 months down the road. So roughly 6 months from today, in my opinion. You understand how I got to that? So, you know, it may need time before we actually see the revenue from this production come into play. However, yes, this is good news. This is good news for this company, because I know people were basically kind of just, like we say, they were sitting on their hands and just kind of waiting for this facility to be up and running. So, the fact that they built it that quick too, and now we're looking to start producing our first samples, in my opinion, that's positive right there. That's very nice. It's very nice. 15-year pioneer status for producing its batteries in Malaysia. Okay, very nice. Produce within the Southeast for 15 years. One of the benefits of getting the status is an exemption from income tax payment. All right. I mean, hey, getting a tax exemption on any level is a positive, right? 52-week low. Stock drops. Any updates? Here we go. Enovix price target maintained $24 a share. EF Hutton. Okay. And this is basically when they reported earnings. Enovix target maintained with a 30 per share by Cantor Fitzgerald. 17 a share by Canaccord Genuity. Right, the revenue increased, the loss widened. Right, and this is when we looked at it. So let's recheck the forecast real quick and I'll let you go. Everyone's pretty bullish on this. Everyone is pretty bullish on this. Which, again, is why, again, I know the video's got a couple of dislikes in the past, but, I don't take it personally. I understand why you guys, dislike the video. But overall, it seems like everyone and their brother is on board and agreeing that we can have serious growth down the road, which is why I'm saying in this moment the fact that after we ran it up so much, for us to bring it down so much, while during this time frame we were waiting for these situations. We were waiting for the facility to be built, we were waiting for the samples to come out, right? So now that it's happening, we potentially see more value down the road. But yeah, the problem was, in my opinion, it just went too high too fast. So that's why I was personally saying, nah, it's going to fall like a rock. I don't care what you or the company is telling me. And, unfortunately, it turned out I was right. But as we see here, everyone's basically bullish on it. We have 13 analysts currently covering the situation, 12 giving this stock a strong buy, 1 giving it a hold. All of these price targets significantly higher than the current value, the current stock price. So this is why, again, if the company, in my opinion, is actually able to start doing this, wow, we may seriously be off to the races. But in the moment, again, I laid out my case. I'm personally looking for a pullback to about 4.5. But if you let us know in the comments, like, oh, you saw the big drop today, we hit new lows, you started, going in heavier, in my opinion, I wouldn't call you crazy. Let's just say that, right? But I'm going to end it there. So, again, I know a lot of you guys are watching this stock, maybe waiting to enter, or you've been in for several months now, just waiting for a couple of years down the road. So give us all updates in the comments section. If you added to your position, if you recently cut the position, but you're waiting to re-enter at a lower price, if you're looking for that $20+ price again inside of maybe the next 18 months or something down the road when that revenue really starts chunking in, let us know your views and your thoughts in the comments section down below. But I'm going to end it there. So once again, Stocks by the Numbers, thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That's how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.